Hello everybody, this is Bud Fox with Ichimoku Trade, and welcome to the segment. The January effect has begun. How are we trading it with the IMTF indicator? First, we got to go through our disclaimer. Trading is risky. This video is for educational purposes only. We do not recommend that you buy or sell any trading instruments at all. We recommend that if you are going to engage in trading any instruments, you contact your licensed financial advisor to give you guidance. So again, these are all hypothetical situations. This is for educational purposes only. I will be using TradeStation charts, and let's get ready to go. Okay, so I guess the first stock that I have on my list is Delmar Pharmaceuticals. So in looking at this, we had an initial pop off the, well, let's first go into what we're looking for, because I don't know if everybody watching this is used to following me. So a lot of these things, what we look for is a big sell-off, a consolidation, a clump of white support crosses. These are the long-term IMTF support crosses, and then a break above, and then we start tracking it. Once it breaks, this wall of crosses. So right here, it broke the wall of crosses on December 26th. If you can see, it sold right back into them at 101. So it gave you a chance to get in at 101, 102, and then once the new year started, take off. Okay, the first trading day of January, it went as high as $1.24. So already that's like 20% in the first day of trading. Hit as high as $1.75. So, you know, just this first week alone has given us a lot of winners, from a percentage basis. So again, you can see that this was just a pretty easy trade. This is what we look for in January, like I said on my last segment, which was about 3 weeks ago. This is what we're going to be focusing on, and it just falls right within our repertoire. Let's go to our next example. South Cross Energy Partners. This is an MLP. Oil is definitely in play, so I'm looking for a nice little run on this one. We have in here, hit the bottoms, consolidating with crosses, and we broke out on, look at that, January 3rd. January 2nd, had a five-point trading range, and then January 3rd it broke out, hitting as high as $1.90, low of 171. Today's cross is down at 173, and that kind of lines up with where the crosses have been. So I know the stock closed at 185, but it looks good, and we'll see where this takes us. But again, sell-off, wall of crosses, pops up. Let me see something here. I'm going to go to a 30-minute, and I'm showing you this for a reason. As you can see, the 30-minute bullish breaks up. So this is bullish, and it's above the Kijun-sen. Let me go back to DMPI. And there is a reason why I'm showing you guys the 30-minute. Okay, here we go. Same thing, above the 30. Which I will get to in a little bit. Here I'm going to go to a stock that I've mentioned a bunch of times, Ameren Corp. This I mentioned probably 2 segments ago. Just because this was a growth play that showed up, and it was a small cap, but this didn't really have a wall of crosses, but it had a nice move up and pull back to a cross here at about $3.20, and it's just been on fire ever since. And this has basically just been I don't know if this is so much a January effect play as it is a growth play. But just the way we got in, it was the same way we've been getting into most trades that we're looking for reversals on. and that's just cracking above the crosses and pulling back to them, and then just taking off. I still like this as a buy on pullbacks up to about $5. I know there is a price target of 10 on it, and it just looks good. Next one, this we mentioned. This is probably in our last segment because the breakout happened last month. Same thing though, this stock had hammered down, it consolidated, you had crosses. Here's the first day it broke up on those crosses. It wound up going up to about $1, right? High 102, came in, and now you're getting another wall of crosses in here at about 83 cents, 82 cents, which it is holding. So we'd like to see another pop on this. But again, just another example. See how it looks on the 30. Yeah, so it's above the cadence and above the cloud. Just another example of how this trading theory works with the IMTF crosses. Here's one that popped on the new year. I mean, we kind of got above the crosses here on December 26th. So we popped up to about 108. And then it had come back and just hanging around $1. And then on the 4th, it kind of took off, hitting as high as 114. And then 115 the next day. And we'll see what happens. At the very least, we could see 136 on this. And if it winds up being a nice bullish cycle, it could break out of the cloud, see where we go. Either way, this is low risk. You stop out if it breaks below $1. So, yeah, at least your risk is defined. You know where you're going. Next one, Westmoreland Coal. I don't know what the status of coal companies is going to be, but I mean, this is just a chart pattern. You can see this stock has gotten annihilated from at least 13 down to $1.40. And if let's expand this a little bit. So here it was below the crosses, but now it's popped above today, or not today, but the last trading day. So we could see what happens with this. Will it pull back to $1.38? Will it give us a chance on the 30-minute? Let's see. 30-minute KS is moving up. Maybe the crosses will move up on that. But again, just another example of what we like to see. And I think that pretty much wraps up the examples that I wanted to show as far as the January effect goes. And again, when I say January effect, it's just, you know, at the end of the year, you just get a lot of stocks that whoever wants out is out. So there's a lot of room to go on the upside because you don't really have sellers anymore. Again, we love to play the sell down, consolidate, break through the crosses, and see how high it can go. And again, the biggest part about it is risk reward. You know that if it's going to break below those crosses, you're going to get out, and your profit could just be infinite. If anybody has any questions, you can contact us at info@ichimukutrade.com. Ask us questions. If you want to see something, let us know. Obviously, we don't know what else to do unless you're going to ask us. Actually, one last thing before I go, which I forgot to mention. How do I get these opportunities? It's real simple. I go to the real-time scanner. This is on the www.ichimukutrade.com website. And I set it up just using 2 tabs. I go to the daily, turn it on, it's on. I go to sentiment, and I make sure it is bearish against the cloud. Daily bearish against the cloud. Then I go to my 30-minute, turn it on, and I go to bullish price versus the Kijunsen. So I'm waiting for the price to go up and cross the Kijunsen on the 30 and have it be a daily bear. And you get a lot of opportunities. Here right now I'm just following the S&P 500 and our list of small cap stocks. You get plenty of ops. You know, at least 50, 60. And you got to go through all the charts and make sure they all match. Just because it's on my scan does not mean it's a winner. And that's it. So if anybody has any questions, let us know. Have a good day.